Silver investors could make a fortune. Billionaire Eric Sprott and other top gold analysts predict that silver will dramatically outperform the yellow metal. In order to maximize your exposure to silver, consider shares of Golden Arrow Resources trading on the TSX Venture under GRG and the US as GARWF, where insiders have accumulated 50% of the company, and billion-dollar giant Silver Standard Resources has taken an 8% stake in the company. This company has 250 million ounces of silver resources and is headed up by the one man who is responsible for the largest silver deposit discovery in history. Learn more at futuremoneytrends.com/silver100. Greetings and thank you for joining us at futuremoneytrends.com. I'm here with David Jensen. He is a blogger that several of you have actually sent me his articles, and we reached out to him. You can find his articles at safehaven.com. It's a very reputable blog. I put it up there, right up there with Zero Hedge. David, thank you so much for joining us.
My pleasure, Daniel. It's good to connect.
Well, hey, David, let's start off with the precious metals. I do want to get into the economy and post-crisis, but the interest right now for most of our readers and subscribers is the state of the precious metal market. Prior to the call that we just hit record on, we were talking briefly about silver. So let's start off with silver, and then please, if you can let us know, what are your thoughts on basically the silver market and gold market for the rest of 2016?
Okay, both of these markets have their price set. The official sector price, which is what the mining companies pay, are paid with, is set in London on a daily basis with the fixing. And really what I see as the fatal problem here for that price measure is the fact that they're trading unallocated contracts for metal, which are not actually backed by metal themselves. And as a consequence, they're trading promises for metal delivery, and these promises can be inflated to infinity. And what we know is from an LBMA, the London Bullion Market Survey from 2011, they did a London liquidity survey from which they got 65% of the traders responded. And the indication then was that roughly 10 times the volume that they post every day is settled volume, in which the parties conclude an exchange of metal ownership, that they actually see trading volume that's 10 times larger. And the actual volume may be much larger because, as I said, only a portion of the traders responded to that survey. And what that means then, Daniel, is that they're trading these promises and in the spot market, not in the forwards or the futures market, but in the spot market. And they're trading claims for metal that doesn't exist. And there's very large claims in that market of open interest, estimated to be of 400 to 600 million ounces for gold, and of the order of 4 to 6 billion ounces of silver. And to loop this back to silver, the real problem that we have is when you've got 4 to 6 billion ounces of spot claims standing in the market, you've only got 1 billion ounces of refined silver stockpiles globally. And we can see right there that it's not possible to have all these claims in the market met. So the silver market's the one that I think appears to be failing first. And the driver for this failure is the fact that there are fair markets that are establishing themselves globally where they actually do trade the metal, principally in Shanghai. And we're now starting to see very substantial price premia in Shanghai for physical silver. And this is what really is the end point or the terminus for this paper trading scheme, because you can no longer smash the price down with paper with impunity if there's massive offtake and the metal gets swept away to these other markets. And that's what we're seeing now. We've seen now over the last couple of months 30 to 40 cent premium in China for silver versus New York and London. And I saw today that it was over 50 cents. So when we're looking at a shipment cost of roughly 2 to 4 cents to ship physical silver from New York and London over to Asia or other points globally by shipping container, including the trucking costs on both ends and insurance, there's a very large arbitrage opportunity there for shipment of metal, and that is what is happening now, and that is what I believe is going to prevent any serious smash down, and actually we'll see much higher prices in the future. This is kind of running on.
No. Well, we've definitely heard this before. Only you are telling us that the reason 2016 and 2017 will be different is because of the Shanghai exchange. What about on the supply side of silver? Because I have, through our own research and other things I've talked to with like people like Keith Neumeyer, and then the fact of the matter is the silver deficit grew significantly from 2014 to 2015, and it's also projected to continue to grow in 2015 to 2016. What are you seeing on the supply side? What are you reading or hearing about from other people?
Well, at the margins, there is a deficit, of the order of 100 to 150 million ounces, but I don't think that that's the central issue. I think the central issue is the extraordinarily large open interest in claims in the spot market in London. And that's really the whale or the elephant, if you will. And it's the reallocation of those claims where electronics manufacturers and solar panel manufacturers and anybody that uses and is dependent on silver sits with spot market claims, and they believe that they're hedged and that they've got a supply there. And what Keith Neumeyer was saying was that he was actively being pursued by electronics manufacturers for long-term contracts for the supply of the raw material, unrefined doré, directly from the mines. And what that indicates is that the electronics manufacturers are not trusting the bullion banks, they're not trusting the exchanges, and they're not trusting even the refineries as a source of supply. They're really going to the raw material suppliers themselves. So, at the margins, there is a deficit, and it is out there, and it is increasing. But what I think what we're seeing here is that there's an activity in the market, and as we touched on before the interview here, that we've seen this tremendous run in the silver equities since the middle of January. And for instance, Coeur d'Alene is trading at 850% or 8.5 times of what its mid-January price was. And we're seeing now investors rolling heavily into these silver equities. And I think that's what's signaling that there's a major price move coming ahead of us.
You think silver will break 25 by the end of the year?
Tough to say what the number is because, it's a digital price for a digital asset. And what's going to happen is that this paper market is going to break and it's going to become a physical market. And you're going to have a completely different pricing structure. And I really can't venture, a fiat number for what it's going to be, but I think it's going to be materially higher from where it is now. And I believe that's why we're seeing this enormous move in the silver equities, that they're front running the actual move in the paper silver price, or in the silver price, pardon me, and that the paper silver price that we're tracking, yes, it's up 45% since January. But it's been vastly outflanked by the movement in the equities. And I just think that what we can see from an exchange which is open in terms of the open interest, in New York, for instance, they are at record highs in terms of the open interest for silver claims in that market. There are enormous and growing numbers of claims for silver, and I think we're going to reach a breaking point here in the next 6 months.
Well, and certainly if you have a lot of money or if you're managing a family fund, are you going to buy physical bullion? Or are you going to put it in something that's very, very liquid, like a mining company? So it's safe to say the mining shares will continue to there is no comparison, their return versus the physical bullion. Let's move to the economy. Other drivers for the precious metals. We've got 1/3 of the central bankers with negative interest rate policies. The U.S. is totally backing off of these 4 rate hikes we were supposed to see. What do you think is happening with specifically the U.S. economy? And then if you'd expand just to how it affects the global economy, is the U.S. economy looking at a second leg down or another recession, official recession?
Well, I think if you look at real numbers and true inflationary measures, that the Western economy, let me put it that way, because it's the one for which we have the most information, that the Western economy is already in a downturn. When you fudge the GDP numbers and you fudge close to zero growth, but I think it's inevitable that the markets will turn down, the economies, will turn down as a consequence of our loose money policy. And from an Austrian economic standpoint, printing money to create growth creates a imbalance in the economy between your consumption side of your economy and your productivity, your production side of your economy. The production side is not increasing in terms of increased productivity and output, but you are increasing your consumption through debt. And what happens then is once that consumption cycle is finished, that the economy turns down. And if you continue to try to increase the economy with more and more debt, then the imbalance between your consumption and your productivity continues to grow until you have the blow-off phase that Ludwig von Mises referred to, and you have a precipitous decline, and ultimately you have a currency crisis that comes out of loose money policy. So, U.S. And Europe economies, to me, are in a very similar situation, that they've pursued monetary loosening as a way to get economic growth, and that they are all showing a secular stagnation. Larry Summers says we need negative interest rates, but that's just saying that what we've done so far doesn't work, and we need more of it. And it's a bit of a fool's errand to do that, which the central banks appear willing to do.
Yeah, it's funny. They tell you everything's looking good. We're going to do rate hikes. It's normalized. The jobs are coming back. Unemployment's at 4.5%. But meanwhile, their actions are negative interest rates, near zero interest. I mean, these are all extreme measures in a so-called normalized economy, at least from the numbers standpoint that they keep spitting out. I want to talk to you before we close out the interview about just the idea of safe haven. I know you're an author at Safe Haven, so I don't specifically want to talk about safehaven.com unless you want to, but the idea of safe haven. Going into the next few years, going into the next 10 years, where is the safe haven? What should people be doing? How should they be changing their perhaps portfolios and even lifestyles?
Yeah, well, I think that what you can look, Bill Gross has even come out now, the bond king in air quotes. He likes land and gold and silver and food production. These are the real assets. Gold and silver are monetary assets with a 4,000-year history, and land and food production capacity always holds value as it's a necessity. And I think energy as well. If you have a currency destabilization, you want to have energy production facilities, because importation of energy becomes difficult if you can't export your debt. So, those to me are the real safe havens. I like things that are not traded in the financial markets. The stocks are still very interesting in terms of a portion of your portfolio. But my personal belief is that you want to have the majority of your assets in hard assets that are not dependent on sound functioning of the financial markets, because of the tremendous buildup in debt, and especially of the debt-based derivatives market, which all the major banks hold on their balance sheets.
David Jensen of safehaven.com. David, if someone would like to reach out to you, perhaps personally ask you a question, or if they're interested in perhaps in the future subscribing to your own blog, where's the best place for them to go?
LinkedIn, my contact details are there. I'm happy to respond to people and share information, and that's probably the best single source for how to get in touch with me.
David Jensen of safehaven.com. Thank you so much for your time. Look forward to talking to you again real soon, sir.
Thank you.